Hello everyone, welcome to Banking and Finance with Chitrak. Today we are going to present around 30 MCQs regarding the first chapter of anti-money laundering, which is money laundering and terrorism financing. And after watching the video, do comment below how many of the questions you got right. So let's begin. Now the first question is, which one is not a correct definition of anti-money laundering? The first option, money laundering is a process by which proceeds from criminal activity are disguised to conceal the illicit origin. Number B, any act or attempted act to reveal the identity of illegally obtained proceeds so that they appear to have originated from legitimate sources. The next, it is the conversion of profits of illegal activities into financial assets which appear to have legitimate origin. And number 4, this directive focuses on the concealment or disguise of the true nature, source, location, disposition, movement, rights with respect to or ownership of property derived from serious crime. The answer is B. And you can see the definition. And why is this? Because first one is given by IMF, the third one is by US Senate's Subcommittee on Narcotics and Terrorism, and the fourth by Article 1 of EC Directive of the March 1992. But in the B option, it is a definition by Interpol, but instead of reveal, it's supposed to be disguise or conceal. Now, the next question. Which one is not a dirty money? The options are bootlegging, arms dealing, extortion, and smuggling. The answer is arms dealing. Well, bootlegging is when someone illegally manufacture, distribute, or sell goods, especially alcohol or recordings. Extortion means which is blackmailing or threatening others for things like money or property. Smuggling is taking things or persons out of a country illegally. Now, arms dealing is not a dirty money if you have license to deal. The next question is, when was the term money laundering first used legally? The options are 1982, 72, 70 and 1984. The answer is 1982. The next question. What is the primary goal of money laundering? The options are to increase the legal wealth of criminals, to conceal the illicit origin of money and make it appear legal, to evade taxes legally, to invest in legitimate businesses without scrutiny. The answer is to conceal the illicit origin of money and make it appear legal. The next question. According to United Nations estimates, money laundering accounts for what percentage of global GDP? This is a very important question and the answer is 2 to 5%. And they said that if money laundering was an economy, it would be the fifth largest in the world. The next question, when was the first estimate of money laundering made and by whom? The answer is John Walker in 1995. Note that all the other options are also related to the definitions of money laundering. Do check that out in the previous video where the notes was given. The next question, which of the following is an economic effect of money laundering? Enhanced monetary policy predictability, fair competition among businesses, distortion of prices and crowding out of honest businesses, stable exchange rates. Distortion of prices and crowding out of honest businesses. Because during money laundering, the exchange rates are definitely not stable. There is no fair competition among businesses, and also the monetary policy predictability is not enhanced. Rather, it becomes not possible to detect it. The next question is, countries with no control on money laundering are attractive harbors for criminals, which leads to which effect? Social effect, political effect, economic effect, or none of these? That is social effect. The next question, which one is an example of political effect of money laundering? The options are camouflaging ill-gotten wealth of corrupt officials, volatility on exchange rates of a country's currency, unfair competition between honest and dishonest businesses, and collapse of democratic systems of a country. The answer is going to be collapse of democratic systems of a country. The other options are also an example of different type of social or economic effect of money laundering. The next question, if money laundering were an economy, how large it would be? Remember, we did the fifth largest economy. The next question, to prevent money laundering, what should banks do? 1. Keep all the transactions open for public view, bribe the officials, open accounts only after background verification by police, and train staff and update technology software for scanning transaction. The answer is obviously number D. The next question, what are the impact of money laundering on financial systems and banks? Number 1, reputational damage, enhanced deposits, increase in fraud or regulatory actions. The answer is going to be number D, only 1, 3 and 4. Now the next question, why are banks vulnerable to money laundering? Number A, they are required to accept all deposits without scrutiny. They provide services that can disguise the origin of illicit funds. They are exempt from regulatory oversight and they operate only in cash transaction. The answer is B, because banks deal with services which disguises the origin of illicit funds. Number 14. Which of the following is a consequence for banks failing to comply with anti-money laundering regulations? Number A. Increased customer trust. Number B. Regulatory penalties and reputational damage. Number C. Higher profitability. And number D. Reduced operational costs. The answer is going to be number B. The next question, the BCCI or the Bank of Credit and Commerce International scandal highlighted the importance of which? The options are offering anonymous accounts to high net worth clients, knowing correspondents, banks and screening major shareholders, expanding operations to offshore financial centers, and avoiding technology's advancements in banking. The answer is B, knowing correspondent banks and screening major shareholders. We are around 50%. We have completed 50% of the questions. So now the 16 number question is, which international convention first defined money laundering in the context of drug trafficking? Number A, FATF recommendations in 1990. Number B, Basel Committee guidelines in 2001. Number C, Ulzberg principles in 2000. And number D, Vienna Convention in 1988. Is Vienna Convention in 1988. Now the next question. According to the IMF, money laundering is best described as a process to invest illegal money in stocks, legal tax avoidance strategies, disguising the origin of criminal proceeds, and cross-border currency smuggling. IMF told that disguising the origin of criminal proceeds is a type of money laundering. The next question, the FATF defines money laundering as processing criminal proceeds to hide their illegal origin, profits from legitimate businesses reinvested illegally, funds transferred to tax havens, and cash donations to political organizations. It is processing criminal proceeds to hide their illegal origin. The next question, which organization associated with money laundering with illegal tax avoidance? The options are Interpol, UNODC, Office of the Comptroller of Currency, Washington DC, USA, the Crown Prosecution Services, UK. The answer is number C. The next question, who defined money laundering as the concealment or disguise of the true nature, source, location, disposition, movement, rights with respect to or ownership of property, knowing that such property is derived from serious crime? We discussed it in the first question. The answer is going to be C, Article 1 of the EC Directive of March 1992. The next question, Riksbank scandal involved facilitating money laundering for a Chilean dictator, offering anonymous accounts to terrorists, investing in illegal arms sale, and falsifying trade documents. It's obviously going to be A. Next question, what was a common issue in RBI's 2013-14 investigations of Indian banks? Non-adherence to KYC norms. The second option, excessive lending to legitimate businesses. Number C, high interest rates on deposits, and number D, lack of ATMs. The answer is A. The 23 number question, where did the European Union Bank initially registered as an offshore bank? The options are Cayman Island, Chile, Antigua and Mauritius. The option is Antigua. The next question, how did Bank of Credit and Commerce International was able to evade usual restrictions? Number A, operations were made up of multiple layers of holding company, affiliates, subsidiaries, etc. related to one another in a complex way. Number B, by bribing officials of regulators. Number C, by masking the transactions. And number D, hiding the transactions in layers of high level security password. The option is number A. Question number 25 is, trade-based money laundering often involves A, over or under invoicing of goods. Number B, transparent shipping records. Number C, high tariffs on imports. Number D, legal tax incentives. The answer is over or under invoicing of goods. Next question. A key difference between money laundering and terrorism financing is, terrorism financing always uses clean money. B, money laundering hides the source while terrorism financing hides the use. Number C, terrorism financing is legal in some countries. Number D, money laundering funds are always used for violence. The answer is number B. The next one, according to the United Nations, terrorist financing includes funds intended to A, build schools in conflict zones, B, intimidate populations or compel governments, C, pay ransoms for hostages, and D, sponsor legal political campaigns. The answer is B, intimidate populations or compel governments. Question number 28. Which of the following is a challenge in combating terrorism financing? Number A, universal agreement on what constitutes terrorism. Number B, excessive regulation of charitable organizations. Number C, lack of international cooperation. And number D, over-reporting of suspicious transaction. The answer is A, universal agreement on what constitutes terrorism. So, next question. Which measure is effective against both money laundering and terrorism financing? A, reducing international trade. B, implementing robust KYC and transaction monitoring. C, limiting cash transactions to small amounts. D, avoiding cross-border remittances. The answer is B, implementing robust KYC and transaction monitoring. The next question, what method did European Union Bank of Antigua use to attract illicit funds? Number A, offering high interest loans. B, investing in real estate. C, providing numbered and coded accounts for anonymity. And number D, issuing credit cards without verification. The answer is providing numbered and coded accounts for anonymity. Question number 31. In the Riggs Bank scandal involving Equatorial Guinea, what violation occurred? Number A, failure to report large withdrawals to regulators. Number B, charging excessive fees to clients. Number C, refusing to open accounts for diplomats. Number D, investing in sanctioned countries. The option correct is A. Next question, which of the following is a challenge in combating terrorism financing? Discuss this question. It's number A. So the final question of this chapter is, which measure is critical for detecting both money laundering and terrorism financing? Options are limiting international wire transfers, robust transaction monitoring systems, closing all high risk accounts, and banning cash transaction. The answer is B, robust transaction monitoring system. So that is the end of this MCQ video. I hope you guys liked it, and subscribe the channel and comment for the next chapters which are coming very soon. Thank you so much for studying, and all the best for your exam.